It's time now for our 360 round. For that, let's bring in our panel to discuss Oklo's earnings. Joining us now, Joe Rinaldi, President and CIO at Quantum Financial Advisors, and Jason Britton, President and CIO at Reflection Asset Management. Thank you both for being with us. Jason, let's start with you. I'd love to get some of your key takeaways from the earnings that we got yesterday.
Well, Marley, I think it's an interesting story in that the stock has whipsawed, right, in the last 24 hours from down close to 7% at the close yesterday to opening up and trading in a range today of like 116 to 104, putting back a lot of that loss. So to me, it's the market trying to make up its mind. I mean, it was a 20-cent net share loss, very little revenue to speak of, and basically mostly hype. And I'm not sure where the market knows which way to lean.
And Joe, coming to you with the same question and also anything you want to address there that Jason just said about the hype and some of your takeaways from their report.
I think if you look at many of the stocks in that sector, they're up or down 10%. So it doesn't surprise me that these stocks are very volatile. But I do believe longer term, this is the space to invest in, even with high PEs.
Yeah, nuclear, a space we continue to talk about, especially with this AI build out. Jason, coming back to you, we saw them report a deeper than expected loss. They had that 20-cent loss. I think expectations were about 13 cents for that loss. But still, the stock trading higher now. We did see that whipsaw action, but they're up 5%. Year to date, they're up more than 400%. How do you explain that kind of disconnect between their performance and their valuation?
So similar to Joe's point, just because the price earnings multiples are really, really rich doesn't mean that the stock's not going to move up. I think this is purely a narrative trade, and it's a narrative trade based on AI. People are clinging to the hope that small modular reactors will in fact be the saving grace on the infrastructure side that allows us to continue to achieve that computing power and the growth that's needed in the energy sector. That's why, as Joe said, all those other stocks are plus or minus 10% as well. I mean, if you boil this down to fundamentals and reality, none of those stocks in that sector on the small modular reactor side has actually produced power at commercial scale. None of them have much more than a handful of regulatory approvals and a handful of contracts that are promises to sell at some point, right? The nuclear energy space, while satisfying two investment themes. One, the clean energy transition, but two, the only way to really get to scale, because it takes so long to build power plants otherwise regulatorily. You do have the headwind of a very friendly regulatory regime, but you still have that bottleneck from all of the components and all the other challenges. I agree with Joe. It's a long-term play, and I think you can buy in, especially if you're being smart and buying the dips. But the reality is you're 7 to 10 years away from seeing a data center fully powered by an SMR.
And Joe, Jason just said this is a narrative stock. We're talking about the story here is they don't have any revenue and they haven't actually created anything yet, but they did get their DOE approval for their nuclear safety design. They're building their fuel fabrication facility. Is this meaningful process? Is this enough for this, show up scenario that we're looking for here? Or is this just a regulatory milestone that isn't enough to move the needle?
You're asking great questions, and I think that's generic throughout the whole sector. But I just want to pivot a little bit. We have a huge position in BWXT because I believe the forward earnings on that company is much more stable in this sector. They already have N number of government contracts, and they do have some modular machines out there producing energy on a modular basis. So I think that is a great play. We've been accumulating that stock anywhere from 90 to 110. It's close to 200. Our intrinsic value at current U.S. Treasury 10-year rates are approximately 250 to 265. And if rates go lower, that intrinsic value target goes up above 300. So we love that particular company, and we think that is a leader in that small modular space.
So, Jason, coming back to you, let's stay in this small modular space, not so focused on Oklo. We've got BWX now a part of the conversation. We know a part of the drive here in their next 5 to 10 years is nuclear meeting the demand for this AI build out, this data center build out. Is it realistic that startups like Oklo and companies like BWX, although they do have functional SMRs right now, as Joe was just saying, are they really positioned to meet that demand, or are we still going to see that come from natural gas and renewables?
So I think both of those sentiments are right, and it's a question of timing, Marley. I think that in the near term, I mean, there was just an article this morning around a lot of the companies that are in the SMR space who are trying to bring things online. I know there was one contract that was just signed between Google and the Tennessee Valley Authority that they're going to actually start producing power using those natural gas-fired plants in the near term and then pivot to the SMR once it becomes up and ready. To pivot off of Joe's theme, while BWXT and a lot of those names, I do agree, are, if you're a seasoned analyst like Joe and his team and you're able to sift through the numbers and find the winners, that's a great place to look. For a more novice investor who doesn't have that sort of research at their capability, you can look at some of what I believe will be an additional play in the space, which is consolidation of those winners by the big producers today. So TerraPower, which is backed by Bill Gates, Rolls-Royce, Westinghouse, and GE Hitachi, all names in the nuclear space at the utility scale size, sort of conventional plants, also are looking at SMR or have their own efforts there. And I think one of those really well-funded companies will likely snap one of these really thoughtful producing startups up and really be the winner.
Well, thank you both for being with us to talk about Oklo, more broadly about nuclear and some of the potential plays in that space. Joe Rinaldi, President and CIO at Quantum Financial Advisor, and Jason Britton, President, CIO at Reflection Asset Management.